won't stop till I hear him say,
Warning: the information that we convey in these videos and the content on this page simply provides general consumer information. It is not legal advice or regulatory guidance. It is not intended to sway your personal bias in any way. We are simply just relaying information already available to the general public. We highly suggest you do your own research and draft your own opinion on the topics disclosed in this video breakdown. Without further ado, sit back, relax, enjoy this video breakdown, and if you're not already subscribed to the YouTube channel, consider doing so now. Okay, what is going on, CYPRX Advanced YouTubers? Welcome back to the CYPRX YouTube page. In today's video breakdown, I'm going to do an intuitive deep dive analysis on a trade that we caught here at CYPRX on GBPJPY. If you're interested in learning technical analysis properly in these videos, sit well with you, go ahead and smash that thumbs up button, subscribe to the YouTube channel. If anybody's interested in learning our technical analysis approach to the markets, as always, ladies and gentlemen, that link is in the description down below. You are more than welcome to reach out to me via the customer support email, schedule a Zoom call, ask any questions that you may have. I'd love to chat with you. With that being said, ladies and gentlemen, it has been quite a while since I've uploaded a technical analysis video breakdown on GBPJPY, but we had a very interesting price call out this morning where I mentioned to the CYPRX students an area of interest in the form of trendline liquidity that we were looking for the market makers to come and liquidate. Here's a screenshot of that here, where I said to the students roughly at around 6:51 a.m. that we were looking for this trendline liquidity in the market on GBPJPY to get taken to then become buyers in the market. I also gave them a specific psychological level, the 168350 psychological level, where I said to them I was looking for the market to pull back into before I become a buyer on GBPJPY. We had a beautiful risk-to-reward ratio of a 1-to-4 RR that played out after those price targets and evaluations came into fruition. So in today's video breakdown, I'm going to go over top-down analysis from the 15-minute chart and below, step by step, how I was able to piece together this trade setup. So stick around for this. This should give you guys some valuable information on how to pick apart the market and how we attempt to do so here at CYPRX. Again, can't give you guys all the gems that I give to the CYPRX students, but we're going to talk about structure. I'm going to give you guys the play-by-play on the 15-minute analysis down to the 5-minute and the 1-minute chart, how I approach these markets. So again, smash that thumbs up button if you like intuitive video breakdowns like this. It doesn't matter if you trade forex or crypto. You guys can utilize these methodologies that we teach here at CYPRX to potentially give yourself an edge in the market. Again, nothing that we constitute here is financial advice. With that being said, let's get started in today's video breakdown. So again, we're going to start with the top-down analysis. We're going to start on the 15-minute chart because always I like to start on the higher time frame. Now for me, that's the 15-minute. For some other students, they like the 4-hour and the hourly chart. Some other people like the daily, so on and so forth. But for me as a scalper, as an intraday trader, I like to really hone in on my skills and identifying areas of interest on the 15-minute chart. So how do I go about doing that here? I've told you guys before on the CYPRX YouTube page. I personally, when I first approach the markets, like to look at the previous day or the previous 2 days worth of trading data. So with that being said, coming into this New York session, if this is where we're going to operate, where do you want to be looking? What do you want to be identifying on the higher time frame? You want to get a gist of where the higher time frame directional bias is potentially moving. So with that being said, coming into this New York session, we would have had all of this price action to analyze. You guys can see I have 2 areas of interest, 1 and 2. So we're going to go into detail as to how I was able to identify those and why I was reacting to those during this New York session, which gave me an edge in the market. Okay. So I've told you guys in the past, what you're looking for is a sweep of liquidity and the higher low that takes place after that sweep of liquidity that leads to a market break in structure. Now, because we're looking for higher time frame areas of interest, that is going to be a little bit hard. So you might need to scale down in time frames to get that area of significance. However, here, this was a very significant area, which you guys can see. This is a pre-engineered low that's set in the market. This down move was a manipulation move to sweep any over-leveraged buyers prematurely in the market during the London session manipulation window that were taking place or involving themselves in the market here in this area. The market makers manipulated price action down into lows. They bought price up, so sweeping liquidity. And then this higher low right here was the first area of interest after the sweep of liquidity on the 15-minute chart, where the market makers during this London session broke previous market structure. So as you guys can see, I highlighted from the candlestick bodies down to the wick and extended that area over to the right-hand side as my first area of interest where I could be a buyer at during this New York session. But coming into this New York session, I also was able to identify that during this London session, pay attention to the significance, ladies and gentlemen. Look at this area of interest and how the banks during this London session reacted to it. So we're still on the 15-minute chart, and you guys can see what the motive was behind the banks during this London session. They were setting traps beneath lows, again, just like they did the previous day. So you guys can see a pre-engineered low set in the market. The market makers manipulated price in this one candlestick. Look at this wick. It drops all the way down to where banking institutions bought from the previous London session. Again, that significant area of interest after they swept liquidity beneath lows and drove price higher, pumping liquidity into the market for the first time after they swept lows was right here. We identified that, and you guys can see how the market makers during this London session showed the willingness to set liquidity traps beneath lows again and then take buys from a discount. So coming into this New York session, we had all of that data to determine. Now, here at CYPRX, I like to trade in tandem with the directional bias of the higher time frame. So if the 15-minute chart as of right now coming into this New York session is showing me a willingness to sweep lows and drive price higher, first session. Second session, I identified sweeping lows and driving price higher. Then above this area of interest that we identified, I want to be a buyer. So for me here at CYPRX, I said to the students that above this first significant area of interest, I'm going to be a buyer on GBP JPY, and I'm going to continue to be a buyer until the higher time frame, i.e. the 15-minute, tells me otherwise, which means I would need to see a break of this area number one, a lower high or a lower low underneath of the area before I become a seller. With that being said, moving on to my second area of interest, which allowed us to identify this sniper entry. Okay, so same criteria during this London session, although price action is a little bit too macro here. So we're going to jump down to the 5-minute chart. I'm going to show you guys again, same methodology. We're looking for the higher low after the sweep of liquidity. Well, remember I talked to you guys about this low right here that was pre-engineered into the market. This was the market move. This bearish candlestick right here swept any over-leveraged players in the market beneath these lows, and then the market ran higher. Now, something interesting I want you guys to take away right here. What happens after the market swept any liquidity or over-leveraged players beneath these lows? What happened next? The market failed to create a lower low, lower high, lower low formation. Ladies and gentlemen, it did. It is logic. So instead, what did the market makers do? They showed us a willingness to create a higher low, higher high formation. Okay, so the market broke previous market structure. It showed us a willingness for the market makers to pump liquidity into the market and drive price higher after creating a wick through a previous pre-engineered low in the market. You guys see that? So it's the same exact pattern as to how we identified this area of interest as to how we identified this area of interest. So here at CYPRX, I like to identify 2 areas of interest that I'm going to trade from before every single session. So that is how I got these 2 areas of interest. And all I simply did was I highlighted from the candlestick bodies down to the wick, identified that banking institutions, after grabbing liquidity from this low here, were buyers at the significant price level, roughly coming in at the 168 psychological level, and I extended that over to the right-hand side. Now, at any given point in time during this New York session, I have identified that I want to be a buyer above these psychological levels. Why? Because institutionalized interest has picked up in the past at both of these significant levels. Now, something else that I've taught you guys here on the CYPRX YouTube page is that banking institutions like to buy from a discount from where they bought from the previous day. Now, that comes in by utilizing our Fibonacci tool on the lower time frame to scale in to institutionalized discounted positions. So now we're going to get into that. We did our 15-minute analysis. Again, generating our confluences to give ourselves an edge in the market. Think about everything that I'm doing. Taking a higher time frame approach and identifying what the banking institutions did beforehand. Identifying areas of interest where we either want to be buyers or sellers from on the higher time frame to trade in tandem with the higher time frame bias. Jumping down to the 5-minute chart to solidify those higher time frame areas of interest, and now paying attention to structure. Okay, let's pay attention to structure now. We're going to jump down to the 1-minute chart. I'm going to talk to you guys about when I mentioned to the CYPRX students and where I mentioned to them that I was seeing trendline liquidity. You guys can see via the screenshot in our GBP JPY chat, I sent the students a message at 6:51 a.m. That's roughly right here at this red line. And I said to the students, I don't like this trendline liquidity. Let's see if the market makers can grab this liquidity. And then if they do, I will be a buyer underneath of that. Well, guys and gals, look at this. Here's one touch of a trend line, two touches of a trend line, three touches of a trend line. I've told you guys multiple times that if you guys see this, most likely we are going to see the market makers attack that. Again, they have to make money before they move the market. So with that being said, to identify an area of discount where we could be potential buyers from, remember, this is our 5-minute area of interest where we determined previously that we want to be buyers if price is above this level. So now let's determine where that discounted buy level is going to potentially be at in the form of institutionalized discount using the same exact tracking methodology that we use on the 15-minute chart. What are we looking for? Again, a pre-engineered low in the market, a sweep of liquidity, a higher low that forms after that sweep of liquidity, and identifying a new A to B move that breaks a previous market structure to then get in at a later time at a discounted price. You guys hear what I just said? If you need to replay that, go ahead, pause the video, replay what I just said, okay? So with the terminology that I just mentioned to you guys, we're looking for a pre-engineered low in the market. Significantly enough, this is that 5-minute higher time frame area of interest that we marked off and dragged over to the right-hand side, remember, because this was the higher low after this sweep of liquidity. You guys catch my drift. So now, same thing fractally on the 1-minute chart. We're going to run through the same exact drill, identifying the pre-engineered low in the market, the sweep of that low, and the higher low that gets formed that leads to a new market A to be moved. Well, ladies and gentlemen, look at this. Here is the higher low after this sweep of liquidity that leads to a new market structure break. So this whole entire move, okay, broke all of these market structure highs over here and all of these market structure highs here. So now this is a new A to B move after the market swept liquidity. You guys catch my drift. So where I took my Fibonacci tool from, again, your Fibonacci tool is a tool that is utilized to measure institutionalized discount and where it is potentially going to be at. So clicking my Fibonacci tool from the low, the higher low after the sweep of liquidity to the high that broke previous market structure, I know to be a buyer at an institutionalized discounted price. Well, for me, that is anywhere below 66% discount. If this is the higher low where banks are buying from after they manipulate price and sweep liquidity, this is our area of interest, then this gives me the green light if price pulls back into the 70 to 79% discount retracement to then be a buyer. Remember, again, higher time frame correlation with lower time frame, ladies and gentlemen. We are buyers above what two levels? We already identified that we are buyers above level 1 and above level 2. Now, fractally, to get that sniper entry, we want to be buyers where? After the market makers manipulated price and showed us a willingness to buy price and drive it higher prior to the New York session, okay? So before the end of this video breakdown, I'm going to give you guys an entire list and breakdown of everything that I was seeing. This is me just breaking down through it, okay? So now check this out. Here is that trend line manipulation, again, to solidify for us as traders to be patient, sit and wait on our hands until that trend line is hit. I told the CYPRX students that we were waiting for that and then we were going to be buyers. Now let's talk about the 1-minute criteria entry and how you can set yourself up logical take profit areas in the form of retail trading patterns that you can identify to give yourself a sound reason as to why the market is going to move in your direction. Remember, at all times, the market makers must move the market in order to profit, okay? With that being said, they have to take your money. They have to take retail traders' money. Now, remember, the majority of retail traders trade what? Retail trading patterns. Well, here you guys can see a retail trading pattern to the downside. Here also, you can see a retail trading pattern to the upside. So here in my entry, you guys can see my MetaTrader 4 entry was 168438, okay? With that being said, I was simply just targeting any retail traders that were selling above these highs. They were taking over leveraged sell positions, selling some type of trend line, taking positions from here, here, and here, and the market makers came straight back for that. So now let's get into the 1-minute entry criteria, and we will break down the entire list of confluences that I've given you guys so far here on the CYPRX YouTube page. Now, fractally, what it is that I teach you guys to pay attention to on the higher time frame, you're going to be looking for fractally as well. Here is a pre-engineered low in the market. And again, this is when we're going to get into logic. So pay close attention, okay? This is a real institutionalized pattern that not a lot of people can identify, okay? Here at CYPRX, this is what we live and trade by. Here is a violation of the low. So here is a bearish leg that violates a previous low in the market. After that happens, ladies and gentlemen, the market creates a high. It fails to create a lower low. Do you see that? That is a lower low. That is a swing low failure, okay? That is a signal that the market makers have no interest in lower prices, okay? They have no interest in lower prices. None. They're like, what? Huh? Everybody's like, what's going on? Is the market going to go lower? No. If the market makers have no interest in grabbing liquidity beneath lows, ladies and gentlemen, where is the only other place where they can make money from? Remember, higher time frame, we've already identified that we want to be buyers above what two levels? A and B. We've also identified fractally that we have a sweep of liquidity here. We've also identified that this was a higher low that led to a new market break in structure, and that this general area was discount in the form of 70 to 79% discount from where the bank and institutions bought from previously here. Okay. Think about all the confluences that we have so far leading up into this trade. It's literally nuts. So now, to solidify entry criteria, we see the market makers fail to create bearish order flow, which is a lower high, lower low formation. And instead, what do they do right here to give us a signal that the market is about to reverse? So number one, they sweep liquidity, or they pre-engineer a low into the market to make money from early buyers in the market, or manipulation, impulsive buyers that react off of impulse and guessing bottoms. They grab that money. They fail to create a swing low and instead create a higher low in the market that leads to a what? A higher high. Ladies and gentlemen, this is the definition of bullish order flow right here. Failure, swing low, low, higher high formation. Now to get that sniper entry, remember, we are already in 70 to 79% discount on the higher time frame, i.e. the 5 and 15 minute in this general vicinity, in comparison to where the banks bought from previously, i.e. remember, again, how did we get here? This low right here, identified by this yellow box that we dragged over from the higher time frame, was what? A sweep of liquidity. Where's the higher low after the sweep of liquidity that we're measuring our discounted tool from? The Fibonacci from the higher low after that sweep of liquidity to the high that broke market structure. You guys can see that we are in buy criteria entry, 70 to 79% discount on the higher time frame. Now we scale in after deleting this Fibonacci. You guys can see bullish order flow again, higher low, failure swing low, higher high formation. That gives us the green light again. The pattern, the institutionalized pattern that we look for, sweep of liquidity, rejection to psychological level, failure swing low. That leads to a higher low, higher high formation. We can now take our fib fractally from the A to B move and get that sniper entry. Look at that retracement to the 70 to 79% discount. Sound, beautiful risk to reward. Logical target areas, again, targeting retail money, retail traders selling highs above this trend line. We're immediately targeted. Okay. Immediately targeted. Beautiful RR risk reward ratio. Again, CYPRX confluences to the T. Telling the CYPRX students in advance how to avoid trendline manipulation, telling the students in advance specific psychological levels that the market could pull back into. And just to show you guys, remember I said in the messages to the CYPRX students that the market was going to pull back into the 168,350 psychological level. Well, look at this. If I take the fib from this higher low that we identified after the sweep of liquidity to the high, and I extend that over, look at what psychological level I sent to the CYPRX students that comes in at the 79% discount to the T. Check this out. Here is the what? 168,350 psychological level to the T, right in correlation with the 79% retracement. That is exactly why I told the students that the market was going to pull back into the 168,350 psych level. And you guys can see that there has been multiple buying opportunities since that has come into fruition. One here, and even another here. And now the market is all the way back at its highs. So with that being said, beautiful execution here. Let's just digest that, because I know that that was a lot. I know that I talk fast to try and compact this into one educational video for you guys. If you're still here, smash that thumbs up button, subscribe to the YouTube channel. I do apologize for talking fast, but let's just calm down for a second and talk about everything that we just went over, okay? Think about this. If you don't have a pen and pad open right now, you're messing up. Okay, if you're not a profitable trader yet and you're not taking note of what it is that I'm attempting to teach you guys here right now, then you're not attempting to mature in your market making decisions. Okay, all I'm trying to do here is show you guys how we have a strategy here that is working for us. I can remove every single thing here. Okay, I can remove every single drawing here and tell you guys the confluences that I had from top down. So let's think about it. Starting from 15-minute analysis, what approach do I have in the markets, ladies and gentlemen? I have a higher time frame directional bias approach. So that means I come to the market every single New York session and I say, what did the market makers do previously? And what are they most likely going to do this session based off of past data? Okay. So we identified that the market makers previous to this New York session were bullish, both London and New York session. So with that being said, that means that we have higher time frame areas of interest in the form of higher lows, because you guys can see the market on the higher time frame is trending higher. It is making higher high, higher low, higher high, higher low formations. We have areas that we need to see broken on the higher time frame before we can be sellers. Okay, so anybody selling at these highs right now is guessing tops. Okay, they're guessing that the market is going to dump, because the market hasn't confirmed that yet. Why? Because it hasn't made lower low, lower high formations on the higher time frame. So we identified that. That's number one. Number two, then we jump down to the 5-minute chart and we identified fractal areas of interest that we could be potential buyers from. All right. Once we did that, we identified sweeps of liquidity in the market. We identified bullish moves in the market in the form of bullish order flow continuations. And then we identify where we could be potential buyers from fractally in correlation with the higher time frame discount. So something I teach the students over here to the right-hand side, I just want to draw for you guys. Imagine that this is the 15-minute time frame, okay? We're respecting bullish order flow, right? You're about to trade somewhere over here in this New York session. This price action right here on the 15-minute time frame is Asia and London. You're looking to trade somewhere over here during the New York session, okay? We know that that's going to be over to the right-hand side, but we also know that over here to the left-hand side, we had buyers in the form of major banks buying from these levels, okay? What you're going to want to do, and what we did today, was all we did was we identified areas of interest where the market makers swept liquidity, created fractal higher lows in the market where we could be buyers from in the form of discount, i.e. higher time frame discount, over to the right-hand side, and then we waited for the higher time frame to pull back into those areas. This is still 15-minute time frame, so I'll draw 15-minute. Once the market comes down in to our higher time frame areas of interest, that's when you scale down to the 5-minute and the 1-minute down here in this area during New York session to see what pattern, okay? So now let's pretend the market has scaled down into our higher time frame areas of interest. What pattern are you looking to see in correlation with the higher time frame now that the market has come down on the higher time frame into your area of interest? On the lower time frame, what you're looking to see is a what? A pre-engineered low in the market set, a violation of that low, a bullish reaction that tells you that the market makers have no interest in driving price lower, a higher low that leads to a higher high formation. And once you get that confirmation, you're then reacting to the market over to the right-hand side to get in on an additional entry. Okay, you guys see that. So now this whole entire structure right here is what you're going to want to see fractally, okay, on the 1 and 5-minute in correlation with your higher time frame discounted areas. Do you guys see how that works? Okay, absolutely beautiful CYPRX confluences here, beautiful risk to reward ratios. If you guys have any interest in learning our technical analysis strategy, our logical approach to the market via how to identify manipulation properly, how to identify time in the market, and reacting to time specification in the market properly. Again, ladies and gentlemen, that link is in the description down below. You can always reach out to me via the customer support email. I hope that this video breakdown showed you guys how intuitive we are here at CYPRX, giving the CYPRX students heads up in advance, showing them manipulation in the market, telling them to wait patiently till we react to that manipulation, showing them how it is that we identify higher time frame psychological targets, being patient enough to react to those targets, giving them a target in advance to react to. Blessings to you guys. As always, be cognizant, be aware. If you enjoyed this video breakdown, go ahead and smash that thumbs up button, subscribe to the YouTube channel. Hopefully you guys benefited from this in some way, shape, or form, learning something about our approach here at CYPRX via our technical analysis to the markets. Blessings to you guys. Nothing that we constitute is financial advice. As always, I will see you guys in the next YouTube video breakdown.
Won't stop till I hear him say